Hi folks, Nick recapping the day. This is Thursday, 6/4. Right across the board. You're looking at my screen, you're saying, it doesn't look that bad. That's the small cap, the S&P. Well, let me zoom out. It is bad. That was the high. That's why it was bad. It was green, down, low. And let me zoom out. 4 hours. That's just too much. Let's go 20 days. 20 days. This was today, almost 20 days ago. Okay, so it was not a good day for the bulls. There was not much you can take good from the bulls. Some shenanigans going on in Apple today. Not so sure what happened. I knew that if it had lost this point, it would have fallen, but then this candle came about right there that changed the game. Spike, spike, and then another big candle here. But anyway, overall, bad day for the bulls. And the S&P, there was much technical damage done today, as I usually tell you. And let's see here, the small caps held well into the close, way better than the indices, the broader indices. And that was encouraging. The internals were terrible. Breadth was absolutely awful. Everything took a tumble here. Headlines were flying. But I think what they sold really is not so much that, well, the headline, the word was that Greece will default tomorrow, and they said they can't make the payment tomorrow, but they will make a whole bunch of payments on June 30th. It's silly. It's like me calling the bank, say, hey, you know what, that $300 payment I owe you coming due tomorrow, I can't afford it, but guess what? I can make a $4,000 payment in 30 days. Okay, so, and I don't have a new job lined up. So I don't know what the logic is there. So the market, I think, not so much priced out the fact that they defaulted, but the fact that there's not going to be a Greek headline tomorrow, most likely, right? So the can has already been kicked by Greece. So nobody's expecting tomorrow to do anything. But we do have the jobs report. If the jobs report comes higher than 300 or around 300, that'll move markets. In which direction? Your guess is as good as mine. The interpretation would be, oh my gosh, the jobs are so strong, she's going to definitely raise rates, and they're going to sell the market. Or, oh my God, jobs are so great, the economy is doing great, who cares about rising rates, we're going to buy. I don't know how they're going to react. So a high jobs number or a low jobs number will move markets. Direction unknown, period. That's one scenario. The other scenario, we come somewhere in line between 220, 205, 230, and then nothing will happen. Everything will fizzle. So I want to look at in the jobs report to see if there's wage inflation. And if there is, then that should be negative markets, because that's what Yellen's looking at. She's worried about that. And as far as the levels, let's look at the levels. So tomorrow it's all about jobs, really. I think Greece is out. Remember when I told you the VIX is too low? You would have made a decent buck. I don't trade the VIX. It's hard for me to make it work. All right, I did a couple of videos today. That's why the circles are there. And let's zoom in to 6 months so we can better see the candle. This is the S&P. We're trying to hold that line. This is a long-standing line that got pierced a couple of times. Look at the volume today. This is a significant move. Remember, doji, usually the next move is big, direction unknown. Well, that's a big move. That's an ugly candle. They opened here. They tried to run. They sold it down to here. The saving grace is they closed a little higher than the low. So they left a small little tail on the bottom and higher than the green. So this orange line continues on down. Not a good sign. What about the Qs? Did they fare any better? The Qs are the NASDAQ, represent the NASDAQ. And the Qs don't look any better. In fact, they look a little worse. Remember I told you these two triangles, squeeze is going to resolve itself. Boom, down it goes. Disaster? No. Setback? Most definitely. Okay? So there is a chance that we may continue down further. But again, we are in headline trading and sentiment trading. Mix the two, you get a muckied up situation where you can't really read it. Volume is also higher than the 10-day average, therefore it's meaningful. IWM, those are the small caps. Terrible candle erasing a great candle. They opened here, they try to run, they try to sell. Good that they closed higher off the low than the other indices. So not a disaster, and volume was a little lower. So it's still holding some hope in the small cap. What about the all-important? Now suddenly everybody's looking at the transports when we started screaming way earlier than everybody. Erased a good candle. So it's still in a bad situation, but not a disaster yet. All right, what else? Let me see here. I do have a few notes. Let me go back here. That'll jog my memory. Yeah, according to, speaking of ranges, I should say, we've been in everybody's complaining, oh, we've been range bound for so long, but that's dangerous. Why? Because when you are in a range bound situation, what tends to happen is both bulls and bears will get lulled into thinking that there's no way, for example, there's no way we're going to get to 200 again. I mean, look at that. We're like 10 points away. Yeah, or there's no way we're going to get to 205 next week. It's only 2.5% away. So it lulls you into false sense of security that these big quotes, 5% are never going to happen. And guess what? They do happen. And when they happen, they catch a lot of people off guard. So when we have headline trading, leave room for error, protects you from that situation. Really important to do, okay? So focus. Remember, I had four focus coming into here, one of which was currency, and today currency ruled, I think, for a while, but then flipped. So there is no one driving factor. So I moved the small caps back to the forefront because that's the only consistent thing. Remember I told you IWM 124.5 is where the battle lies, right? I told you that last Friday. Guess what? We are at 124.5. Look at that. I didn't even check that. Oh my gosh. On the money. Like not 0.51, 0.49, 124.5. Okay? That's where the battle line was. And you can see it here. You can draw a line through it. All right, that's one important point. The small caps, as long as they're holding, and they are holding, then we're in good shape. Markets are in good shape. We have support below and we have resistance above, and that is best represented in the S&P. We do have support below and we do have resistance above, and they're both clear. Another thing that's clear, I also told you this yellow line is important. Pivot point, 2122 in the ES. ES are the E-minis, so basically like the SPX minus a few points. And today's breakdown came from just below that. So let's see here. Not today's breakdown, the recent breakdown. There we go. Look at that. That's the yellow line. Boom. Yesterday, kissed it and fell apart and never recovered. So they're important. All right, so number one, small caps. Number two, Apple. Apple is crucial. It moves markets. It has an event on Monday. So it will probably hold up into the event, and then who knows what they're going to do. Long term, I like Apple. You saw my write-up about it today, enough said. Small caps, Apple, banks, financials, I should say, not just banks. Whoops, wrong one, XLF. Today they weren't underperforming or outperforming or anything, but they're neither here nor there. Goldman Sachs was green today. That's a good thing to note on a red day. So there's still hope, and if rates rise, then they should rise too because they make more money with higher rates. Speaking of rates, let's see what they did today. Big battle. Breakout yesterday, today candle still in the breakout territory, but opened here, closed here. You can see not a good day for rates. Good day for the bonds, must be, because they trade inversely. Bad candle, good candle. That's a good candle, okay? So what happens next? I don't know. But if rates are rising, then if she's going to raise rates, this only makes sense that it goes up there. Remember, I drew this purple thing that should lead us to here. We'll see. This breakout should lead us to here, and then the other one takes us over. I don't know. Speculation, nobody knows. Nobody knows. Oh, today the Christine Lagarde, IMF comes out and says, and that's probably what caused the rip in the morning, asks the U.S., thinks that the U.S., or suggests that the U.S. should not raise rates this year. Okay, this comes a day after Draghi pretty much blames the whole problem in Europe on our subprime mess, the subprime mess that they were buying with both hands. So anyway, so it's ironic that today it serves them that they don't want us to keep rates low, regardless. Anyway, I thought that would mention, I think that's what ran markets up. So the 4 focus points are still my focus points going into next week. Mainly, I want to see the small caps, how this resolves itself. Tomorrow I'll have more on that. I do have a few names to look at, I think, but I'm going to refrain and I'll do a whole bunch of them tomorrow in a video. All right, Nick signing out. If you have any questions, let me know.